All right, welcome back everybody. We have this lecture and then one more lecture and then we'll be ready for the test, won't we? And hopefully we'll be ready for the test, okay? Over 3 and 4 chapters. So chapter 3 and chapters 4. Now the first thing that I want to do today, before we go over the homework, is I want to go over the quiz. Now we had a quiz for those folks who were here live, and for those of you who are watching from home, this quiz, even though you can't take it and hand it in for credit or anything like that, I would encourage you to try to simulate a quiz, taking situation and just see how you would have done. Okay, so this is in your light blue student manual. This quiz that we're going to go through. So if you haven't taken that in a quiz situation, go ahead and pause this real quick and take that. But now, let's go over the answers, okay? All right. Let me switch her up. Okie doke. Now, you probably won't be able to read that too well, but again, everybody should have a copy of it. All right. Prepare AJEs, adjusting entries on December 31 of 07 to record the following unrelated year-end adjustments. And they do not make monthly AJEs. They only make AJEs at year-end, which is important to know, isn't it? Okay? All right. The office supplies account had a $500 debit balance on December 31 of 06. We purchased $35.50 of office supplies, and then we did a count at December 31 of 07, and we had 195 supplies available or left, right? So how much supplies were used up? Figure that out? How many supplies, what amount of supplies were used up? 3,855, right? Okay. So the AJE here is, we're going to debit supplies expense, and we're going to credit supplies for the amount of supplies used up. In this case, it's 3,855. Okay? We're reducing our supplies account so it'll be correctly stated, and we're booking the amount used up in this period. Okay? All right. B. Salaries expense of 5,800 or 5,800 have been incurred but not paid as of December 31 of 07. Okay. So this is like when we did the little calendar thing, right? Except they just give us the amount. So we debit salary expense and we credit salary payable, right? For 5,800. You with me? Excuse me. Okay, they'll edit that out. All right? C. The company has earned but not yet recorded $660 of interest that it has earned from investments in a 90-day certificate of deposit for a year ended December 31 of 07. Okay. What did we debit here? Did you know? Not accounts receivable, but interest receivable. And what do we credit? Interest earned, or interest fees earned, or interest revenue, whatever you want. And that's for how much? 660? Okay, good. All right. Any questions on A, B, or C? Yeah. The 3,855. Let's go back to that. Okay. All right, let's do a T account. Okay, we had a 500 debit balance at the beginning of the year, right? How much did we purchase? 3,550, right? So that's our beginning balance. That's our purchase. And we know our ending balance, right? Our ending balance was 195. So there's one number and only one number that goes in that circle. This plus this minus this has to equal that, okay? Now check my math on the calculator, somebody. Make sure I did it right. But I believe that the only number that goes in there that satisfies that equation is this amount. Can somebody verify that? Okay. Thank you for asking that. Okay, any other questions on A, B, or C? Okay, let's go to D. Depreciation needs to be recorded for the year. The company has only one fixed asset, and they purchased it on January the 2nd of 2007. The asset had a cost of $60 and an estimated life of 5 years. The salvage value is estimated to be 0 at the end of the 5 years. Okay? So, how are we going to figure depreciation? Well, depreciation is cost minus the salvage value over the estimated life, correct? And in this case, that equals, what's the cost of it? 60,000. What's the salvage or residual value? Divided by 5. What's that come out to? 12,000 per year. Okay? And I will tell you, in real life, most of the times people use a 0 salvage value. So they fully depreciate it. Okay? So our journal entry here is, our AJE is a debit to depreciation expense and a credit to accumulated depreciation for $12,000. You with me? Okay. E. The prepaid account had a $9,000 debit balance at December 31 of 2007. Now, an analysis of insurance shows that $3,700 of coverage has expired during the year. Okay. Now, you always got to look at the way that they're phrasing it. We want to know the amount that was used up during the year, don't we? So that's the amount of our AJE, the amount that was used up. So thus, the answer to E is we debit insurance expense and we credit what? Prepaid insurance, which is an asset. Oops, my handwriting's getting a little bad there. Sorry about that. That's prepaid insurance if you can't read that very well. Sorry about that. For the amount used up. Okay? All right. So any questions on any of those 5 AJEs? Okay. All right. You think there'll be those on the test? Yes, there will be. I guarantee. Okay. Let's go to our homework now, if there's no questions. What I want to do now is one of the ones I assigned is Quick Study 4.2. Okay? Quick Study 4.2. Here's what I want to do. I'm just going to take about, 90 seconds or so. And they'll go ahead and play the JCCC music. And I want you to get together with your neighbor, make sure nobody's left by himself. And I want to see if you're in agreement on the answer to Quick Study 4.2, which says list the following steps of the accounting cycle in their proper order. Anna, why don't you jump over there if you can real quick, okay? So nobody's by themselves, okay? So let's take about 90 seconds, 2 minutes, get together with your neighbor, look through Quick Study 4.2, and see if you're in agreement, okay? So let's roll that music real quick. Okay, let's go over the answers to this. This is a nice little homework problem because we are really, Chapter 4 is the final step of the accounting cycle, okay? So now I want you to kind of reflect back on the 4 chapters that we've gone over thus far, and let's try to kind of put this in perspective, okay? What it says is it gives us a number of steps, it gives them out of order, and it wants us to put them in their proper order, okay? So, what is the first step? Anybody know? Analyzing the transactions and events, correct? And these will be, you know, purchasing supplies from a vendor, selling to a customer, obtaining a loan, or making a payment on a loan, investing money into our business or withdrawing it out of the business. A customer pays accounts receivable. Whatever. These are all the different transactions and events that can occur. That's the first step. The next one is we journalize those transactions and events. Okay? We journalize those. That means we make our journal entries, right? Debits have to equal the credits. Total accounts being debited have to equal the total of the accounts being credited. Okay, and we've made lots of JEs during this last few weeks, right? What's the next step? We post those. We post those to the ledger or to the T account. Now, we've been using T accounts a lot. When you get to a computerized accounting system, their ledgers will look a little bit different. More like what you saw in exercise, I believe it was exercise 4.1. Okay, we'll look at that in a second though. What's the next one after posting the journal entries? Prepare the unadjusted trial balance. Do the totals of the debit and credit have to equal on the unadjusted trial balance? Yes. The total of the debit column has to equal the total of the credit column. But that's the unadjusted trial balance. Then what do we do? The fifth one is journalize and post the AJEs, or the adjusting journal entries. Right? That's what we did on this quiz. That's what we did in Chapter 3, right? Okay. Then what do? we prepare the adjusted trial balance. Okay? Prepare the adjusted trial balance. This is the trial balance after the AJEs have been made. Okay? Now next, what is next? What's the next step? It's an important one. Prepare the financial statements. Matter of fact, I'm going to go ahead and highlight that one. Okay? Prepare the financial statements. Remember, primary objective of financial accounting is preparing financial statements that will help users make better decisions. Correct? This might seem like it should be the very final step of all of these steps, doesn't it? But it's not the final step of the process. Okay? It's not the final step of the process. You prepare the financial statements from the adjusted trial balance. Okay? What's the next step? Journalize and post the closing entries, which is what we're doing in Chapter 4, correct? And then finally, prepare the post-closing trial balance. Once again, we do not prepare our financial statements from the post-closing trial balance. That would be impossible, because the first financial statement we prepare is what? The income statement. And all the revenue expense accounts when we get the post-closing trial balance are what? Zero, right? Okay. Did anybody get all those steps right? Anybody? Okay. Good job. Good job. Now, I probably would not be the sort of teacher on a test who would say, write out the 9 steps of the accounting cycle. Okay? I wouldn't be that mean. But I might be the kind of accounting teacher who would give them to you and ask you to put them in order. Okay? Yeah, that's probably a good hint. Okay? Or I would work it in a multiple choice question. But I'm not real big on just memorization for memorization's sake. So I'm not going to ask you to list all 9, but I do want you to know the process. I'm not even sure how I'll test on that yet, okay? All right, any questions on that? If not, let's go ahead and jump over. I'm kind of jumping around in the homework, I know. But I want to go ahead and do exercise 4.3. Exercise 4.3. And what they did here is they gave us the following adjusted trial balance contains the accounts and balances of Ferrara Company as of December 31 of 2009, the end of its fiscal year. Prepare the December 31, 2009 closing entries for Ferrara, and then prepare the December 31, 2009 post-closing trial balance. You with me? Okay, so let's go ahead and take a look at that. This would be another great test question. Okay, as we get closer to the test, I'm going to tell you some things that I guarantee will be on there. I guarantee you're going to have to make closing entries. Okay? I guarantee you're going to have to make closing entries on the test. The other thing that I guarantee you're going to have to make are adjusting journal entries. Now let me, before I forget, emphasize one thing before we go on to this homework. Make sure when you are in the test mode that your brain is not shifted into the wrong gear. What do I mean by this? Pay careful attention on the test. Am I asking you to do adjusting journal entries, or am I asking you to do closing journal entries? Okay? Because here's what's happened on a test before, is they get a question just like exercise 4.3, and their brain is shifted into chapter 3 AJE mode. And then they're like trying to do, and it's like, no. I'm not asking you to do AJEs here. I'm asking you to do closing entries. Does this make sense? So make sure your brain is in the right gear. Okay, I hate for you to miss those points. Okay, What's the first thing that we do in the closing process? What do we close? The revenue account. Let me get this on here so you can see it. Back that up a little bit. You noticed on this one they gave you account numbers. Okay? I don't really care if you use those or not. Just for real life purposes though, most of the time in an accounting software, they will have account numbers assigned to the different accounts. Just like you have a student number here at JCCC, right? Because it's really easier when you're typing in stuff to just to put a little put somebody's number or put the account number, right? Okay. And also you can see by looking at the account numbers, it looks like this company uses account numbers that start with 1 to indicate assets, 3 for equity, 4 for revenues, 6 for expenses, right? So, you know, again, every company is different, but a lot of times somebody will try to have a little bit of rhyme and reason behind the numbers that they assign. Okay? But if you didn't put this in your answer, that's fine. Okay? All right, any questions on that first closing entry? Okay, what's the next thing we close? Expenses. That's all right. It's Monday. Okay, we're still sleepy. We just closed revenue. Now we're going to close expenses. We have to list them all out. Don't try to total them up and just say total expenses. No. This is telling us that we have to go to each one of these 5 expenses in the ledger or the T account, and we have to credit it for the proper amount. That'll zero it out. Okay? These are not little financial statements. These are journal entries, aren't they? Okay? What do I mean by that? I've seen people like draw a line right here. They put a line right here, or they put a line down here and then put that total. No, we're not just adding things up. We're not preparing a little calculation. This is a journal entry. A journal entry is a command to us of what we need to go do to the ledger. Okay? Now let me tell you one of the most common mistakes that people make on closing entries. We are so used to debiting expenses and crediting revenues in our normal journal entries that they flip-flop these entries. They debit all the expenses and then credit income summary, and they credit services revenue and debit income summary. Because it just seems weird to credit expenses, doesn't it? So make sure you step back and realize, well, yeah, it is a little weird. The reason it's weird is because we're closing them out. We're emptying them out. There's not a whole lot of times in accounting that we do credit expenses. Closing process is one of them. Okay? All right, what's the third step? What's the third step? We close out income summary. Okay? Now, where do we get this amount? So I kind of ran out of room there, didn't I? That's the income summary T account. Up here, we credited it for $37,200. Here, we debited it for $28,968. And what is the balance of income summary? 8232. That's where you get the number that goes in. This is where you get the number that goes in that third closing entry. Okay? Now, I always step back and ask myself, do we have a net income or net loss situation here? What do we have? We have a net income situation because the revenues are greater than the expenses. So does it make sense that capital is being credited or increased? I believe it does. Okay? Here's another common mistake people make. The number that they put in this third entry, sometimes they mistakenly will put 48,168. Where did they get that number? 48,168 is from the trial balance that they give you in exercise 4.3. Look at your book. Okay? No, that number that goes in that third closing entry is not taken from that trial balance. It is totally derived from this income summary T account. Okay? We're not closing capital. We're closing the income summary to the capital. And then what's the fourth closing entry? We close the withdrawals. And there's the entry right there. Okay? Questions on that? I know we still have to do the post-closing trial balance. But any questions on those four entries?
Do you always do like the ending capital? I know it.
On the post-closing?
Oh, is that part of the post-closing?
Yeah, let me answer where I think you're going, and then tell me if I don't answer it, okay? Okay, let's take a look at the post-closing trial balance. The post-closing trial balance is right here. Okay. Now, the post-closing trial balance, the only purpose of it is to make sure that there's no temporary accounts listed on there. Okay? Now, this capital balance, when anybody prepared their post-closing trial balance, did they understandably but mistakenly put in 48,168? Did anybody do that? And then add it up and they thought, uh-oh, the total debits don't equal the total credits. Well, that's because this capital amount is not 48,168 or whatever. It's 50,400. How did we get that? We took the beginning balance of 48,168, but then we had to post that third and fourth closing entry to capital. Okay, here we credited it for the net income, and here we debited it for the amount of withdrawals. So our ending balance is 50,400. That's how you get that balance right there, isn't it? You understand that? And if you don't get that there, then these aren't going to be equal. And these do need to be equal. Okay? Was that where you were going with that?
Yeah.
Gil? Okay. Okay, before I forget, do you like it when I tell you things that I guarantee will be on the test? Is that something that interests you?
Just a little.
Okay. Told you I guaranteed AJEs were going to be on the test, right?
Post-closing entries.
And I guaranteed you that closing entries would be on the test. Here's something else I guarantee you will be on there. Is I like to have a test question that lists accounts, and you have to tell me whether they're permanent accounts or temporary accounts. Okay? Do you remember what permanent and temporary are? Temporary accounts are closed. They are zeroed out in the closing process. Our temporary accounts are your revenues, your expenses, your withdrawals, and your income summary. Permanent accounts, on the other hand, are not closed. All your assets, all your liabilities, certainly contra assets would be permanent, like accumulated depreciation. Capital is also a permanent account. Okay? So I like to ask you, here's some accounts. Just tell me if they're permanent or temporary. Erica?
Is this going to be on the test?
Post-closing trial balance? Well, I guarantee you'll have to make closing entries. I'm not going to say whether or not you have to do a post-closing trial balance or not. I'm not trying to be coy or vague. I'm just saying that sometimes I have it on there and sometimes I don't, depending on the amount of time you have. Okay? I would know how to do it. I would know how to do it. But it's not something I would guarantee you will be on there. Like I am these other things that I'm guaranteeing you will be on there. Cool?
We only have 50 minutes, so.
I understand. I'm looking out for you. The thing I always tell students, though, is when I was a student, it was a fine balance between I didn't want so few questions on the test that they were all worth a lot of points each. Are you with me? Are you guys the same way? Have you ever taken a multiple choice test where there were 20 multiple choice questions, each worth 5 points each? As a student, I didn't like that. I would have rather had 33 worth 3 points each. Are you guys the same way?
Yeah, with multiple choice, yeah.
Yeah. Problems the same way, though.
You just go,
Same way with problems, though. I'd rather have more stuff there that is not worth as much. Okay? You say, are you the same way, Brian?
I just miscalculated the time. Like this time, I'm gonna do all the writing stuff first, and then I'll go back and I'll do the multiple choice. Because multiple choice, if you don't have enough time, you're running out of time. You can just go A, C, D, B, F, or
I
whatever.
think that's a good strategy. Everybody has to learn their own test-taking strategy. And I think I talked about this once before, but I'll talk through it again because it's so doggone important. When I was a student, and you should all emulate to be exactly like me when I was a student, but what worked well for me is when I got a test, the very first thing I did?
Look through it.
No, I put my name on the front of it before I forgot. Then the second thing I did is I looked through the whole test. What am I dealing with here? Okay, looks like Krug's asking me some AJEs. Looks like Krug's asking me to do some closing entries. Okay? Maybe I'd look. Is Krug asking me to do financial statements? Because financial statements take a little bit, right? But then you're right, you have an idea. Then I go through the test, and if anything starts to be a sticking point where I'm having trouble with it, I move on. I put a question mark there and say, I'll come back to it. And I move on, okay? Now, the only thing is, sometimes the strategy of doing the problems works well. You have to decide what works best for you. My only caution is this. I have seen students who it takes them so long to do the problems. Like I'll give them 7 AJEs, okay? And I guarantee you're going to have AJEs on this test. But they will spend 25 minutes making 7 AJEs. If it takes you 25 minutes to do 7 or 8 adjusting journal entries, even if you have the right answer, you don't know them well enough. It shouldn't take that long, right? That quiz that you took that we went over this time, that quiz shouldn't have taken more than a minute and a half for each of those AJEs, okay? You have to be able to move somewhat efficiently. But I've seen students burn so much time on one problem that they're left at the end with nothing. You just have to, and this is good stuff to talk about, you have to be a student who knows how to budget their time for the test, okay? It's not unlike money, okay? If I only have $2,000 per month to live on, and there's 31 days in the month, then by day 15, I don't want to have only $4 to live with for the next, couple weeks or whatever, right? You have to kind of budget it out. And if something seems to be taking too long because you're struggling with it, come back to it. Because you want to make sure, I've had students not be able to do easy questions that they know the answers to because they're working so long on a question that they end up getting wrong anyway. Does that make sense? So that's good. That's good. But as a teacher, the challenge is always to make it not too short, but not too long. Okay? Now, at this point, I've taught this class enough times, many times, and I've given tests. I don't use the same test over and over. I'm one of the few who rewrite them. I know how long it takes. I know how long it takes. And if 90% of the class is handed in their test and there's still 5 minutes left to go, I'm usually okay with that. That tells me. The only time as an instructor that I'm always worried, and this has happened a few times early on, is when there's 5 minutes, 4 minutes, 3 minutes left to take the test, and nobody's handed it in. That's the worst thing as an instructor, because you realize you made it too long. Okay? So, good discussion. All right. And certainly relevant, since that's coming up. Okay? Let's go through exercise 4.1 real quick. This is, I believe it's just another closing entry situation, right? The only real difference here is the ledger that they give us is more the type that we would see in a computerized environment. Is that correct? Okay. But let's go ahead and look through that. I'm going to just put all 4 entries up there. All 4 entries for you to take a look at. Okay. Is this a net income or a net loss situation? Once again, this is another net income situation. And actually, next class period, we're going to do an example that, or look at an example that's a little different. But in this situation, again, we have net income. We close out the revenues, we close out the expenses, we close the income summary to the capital account, and then we close the withdrawals account to the capital account. Okay? Any questions on those 4 entries? Closing entries really not too bad, are they? It's like, give us a lot of those on the test. Okay? Now, I believe this one asks you to post the entries and take a quick look at the ledger. The main thing that they want to emphasize here is that the temporary accounts, salaries expense, insurance expense, rent expense, income summary, depreciation expense, service revenue, withdrawals, those are all zeroed out, right? Capital, however, is a permanent account, correct? And I guess they didn't give us, in the ledger, they didn't give us all the assets and liabilities, right? Okay.
I have a question. So on the test, when you ask us to go through and do this, can we just, like, do we have to write everything down, or can we just go through our calculator and, like, subtract this, subtract this, subtract this, you know, add up the revenues, subtract the expenses, and then just...
You mean, can you just give me this and not the entries? Is that what you're saying?
Well, yeah, not do all the entries, but just get the numbers.
The answer to your question is, not only no, can you not do that, but heck no, you cannot do that, okay? When I ask you to do closing entries, by golly, by gum, it's got to look pretty doggone stinking close to exactly what you're looking at right here, okay? Okay? So it's a great question, and I appreciate those questions. But the answer is no. Because if you do not make the journal entries, the ledger will not be changed. The mechanism to changing the ledger accounts, the T accounts, is not just to go in there and put zeros there, okay? No, the mechanism is to make AJEs, and that will go in and zero those accounts. Because remember, if you are ever in a business situation, the computer's probably going to do all the posting anyway. How do you tell the computer what to do? You make the JEs. You make the journal entries, okay? Does that make sense? So no, I want you, and I think I said this last time, when I ask you to do closing entries on this, it needs to look pretty much exactly like this. If you have something that looks different than this, now there's a few things. I don't care if you put those account numbers. But besides that, if you have something that looks different than that, and if you are thinking, you know what, my answer looks a lot different than Dave's that he's showing us, but I think I'm okay. You're not okay, okay? This is the answer. The only thing that you could have done differently is list your expense accounts in a different order right here, okay? But other than that, closing entries looks exactly like that. Does that help? I like your questions, Brian, because it helps me emphasize things. It's like we couldn't set each other up better, okay? All right, do we have one more to go through? We're timing this well, because we have about 5 more minutes. All right, let's go through quick study 4.1. Irvine Company began the current period with $35,000 credit balance in the M. Irvine capital account. At the end of the period, the company's adjusted account balances include the following temporary accounts with normal balances. after closing the revenue and expense accounts, what will be the balance of the income summary account? And after the closing entries are journalized and posted, what will be the balance of the capital account? Now, it might have just been easier to just do the AJEs, but let's take a look at this real quick. And I don't want to spend a whole lot of time on this one, but the total of the revenues were 50, the total of the expenses were 47. That means your income summary account had a 3,000 balance that we closed. That was our net income, right? The capital account, after the closing entries, again, it's the beginning balance plus the net income. That came from our third closing entry, less the withdrawals. That came from posting the fourth closing entry. Okay? You with me? And that gives us our ending balance of capital. Okay?
So what would that be called? Like, 'cause you have a net income, but you're actually ending the year with less money than.
Well, that's because you withdrew more than what you made, which you can do that. It's kind of like in real life. Can you spend in a month more than what you make in a month?
Yeah.
Yes. You can only do that for a prolonged period of time if you have ample cash balance, right? Like if I have $10,000 in my cash account, I can spend a lot more than what I make in a given month. This company has a capital balance that's pretty healthy, a beginning balance capital of $35,000, right? So yeah, in this situation, you're right. That's a good observation. Your withdrawals are greater than your net income, and you can do that. The trouble gets to be if your ending balance of capital goes negative. Okay?
Do we need to put the date in the closing entry?
Oh, you can. The main thing I want you to realize is that they're made on the last day of the period. Okay. All right. So you don't have to put the date. All right. Wait. Everybody got excited because they thought we were done, and we have about 2 more minutes of stuff to do. 3 more minutes. Okay. I want to give you your money's worth. Okay. I want to talk real quick, and I'm going to ask you to read about this in your book. There's 2 things, and I'm going to assign some homework for this. There's some things I want you to do for homework for next class period, but I want you to read this section in your textbook. It's not hard. Okay? I want you to read about the components of a classified balance sheet.
What page is that?
I'm not sure. Somebody can take a look. Just whenever it starts talking about the classified balance sheet. Okay? Somebody find that and you can tell me. The classified balance sheet, 145? Okay. 145 to the end of the chapter. I want you to read about the categories of a classified balance sheet. And I want to pay specific emphasis on, I want you to be able to classify assets and liabilities between if they are current or if they are non-current. We're not going to have time to talk about that today, but I want you to read about it. It's not a hard designation. Okay? Current assets versus non-current assets, current liabilities versus non-current liabilities. But a classified balance sheet mainly starts putting your assets and liabilities into important subgroups. Okay? It's not difficult. Read about it. And the other thing that I want you to read about, and just so we're all on the same page, classified balance sheet starts on page 145 and goes to the end of 147. But I also want you to read about a very important ratio that I guarantee you I will ask about on the test, and that is the current ratio. The current ratio is talked about. It starts on the bottom of page 147 and goes to 148. That, I don't always test you on the ratios that we learn, but I promise you on this test, I'm going to test you on the current ratio. Okay? So, let me give you the homework. Okay? I want you to do, I'm going to write this down, so I'm not done yet. I want you to do Quick Study 4.3, and I want you to do Quick Study 4.4. I want you to do exercise 4.4, 4.5, and 4.6, and just because I love you, 4.7. Okay? Now, we're going to spend the majority of our next period going over the homework, okay? Because it's the last period before the test. But do that homework. There it is, okay? Good class period. Hey, great questions today. Great questions. I like it when you guys ask questions. Have a wonderful day. Bye-bye.